Hello everyone, welcome again to our third class on stock market trading. So guys, so far from our understanding on the stock market, I have explained you basically in the term of corporate finance, like why a company raise money in the form of equity or debt. What is the difference between equity and debt? We have discussed their differences. Okay, we have understood that debt is all about borrowing where the ownership is not transferred, and a company always borrows money for a definite time period. While when it comes to equity, in the case of equity, the company dilute their ownership in the market in the form of shares, and then company makes other the part of the ownership. So I believe understanding about debt and equity is clear with all of you. What is share? Share basically represent per unit ownership of the company, which the company dilute at the time of their public offering. So at the time of public offering, the per unit ownership of the company which they dilute is called as share. So when we talk about share, share can be either ordinary share or it can be either preference share. When we talk about ordinary share, if you know the difference between ordinary share and preference share also, that is okay. Preference share a company issues under certain scenarios, and that is not issued for the general public. Preference shares are always a redeemable equity instrument. Preference shares are basically a redeemable equity instrument which the company will buy back somewhere in the future, and preference share never give you ownership right of the company. So normally whenever we are using the word share, it more or less means ordinary share only. So whenever the company do their public offering in the form of IPO or FPO or right issue, what basically they do, they offers their part of the ownership to the general public. Public basically means when the company do an issue where the company gives their ownership to 50 or more than 50 people. So if the company dilute their ownership and gives that ownership to 50 or more than 50 people, then automatically that issue become a public issue. Okay, and whenever the company do a public issue, they basically do in the form of primary market. The market where the public issue of the company is done, that is called as primary market. And the first time when the company do the public offering, then it is called as IPO, initial public or offering. So already what is IPO and all, I have given you an example of IPO, and I have demonstrated in class 2 about in a company which has done an IPO. So what IPO is all about, already I believe you all are clear with that term. So whenever any company does an IPO, so once the IPO is done, then they have to list themselves on the stock market. Why they need to list themselves on the stock market? Because what they are giving to the public is their ownership. Okay, and the life of that ownership is infinite. So when we talk about ordinary share are basically irredeemable equity instrument. They are basically irredeemable equity instrument, and the life of this instrument is infinite. So since the life of this instrument is infinite, so the issue what the company has done where they have offered their ownership to the public in the form of share, the life of that share is infinite. So what the company has to done, once the IPO is over, they have to list themselves on the stock exchange. Okay, because the share what they have offered, it never get expire. So since it never get expire, so what they need to do to make everything liquid. Liquid means the so that the people can easily buy and sell the same instrument. What the company has to do, they have to transform themselves into public company. Okay, so what is private company? What is public company? For that, we need to read the disclosures under Companies Act of 2013. Okay, so the company, being a private company, now they have to transform themselves into a public company. And once they have transformed themselves into the public company, they have to list themselves on the stock market so that the public can easily buy and sell their ownership from them. Okay, so when it comes to the equity market, okay, we have primarily two stock exchanges. where we can buy and sell shares. Those two stock exchanges are Bombay Stock Exchange and National Stock Exchange. And these stock exchange works from 9 o'clock in morning to 3:30 p.m. Okay, where from 9 o'clock to 9:15 a.m. 9 o'clock to 9:15 a.m. We have something called pre-market hour. So in pre-market hour, basically we cannot buy and sell shares. In the pre-market hour, we can only see the orders, what is being placed by different market participants. Okay, basically from 9 o'clock to 9:07, you can place an order. Okay, like you, everyone in around the world who is trading over BSE and NSE, they will place the order. So from 9:07, once the order is being placed from 90 to 9:07, all orders are placed. Then 1 minute 9:07 to 9:08 exchange do the average of the orders which is being placed, and then from 9:08 to 9:15 we can see the averaged order price. Okay, we can see the averaged order price. Okay, and by looking at this average order price, we can refine or we can modify our order, and ultimately after 9:15 the real trading starts, where whatever the order we have placed, we can that order being executed in the real market. So first 15 minute we have pre-market hour, where we can only observe what is happening in the market. Basically what happens that you have to understand, our market get closed around 3:30 p.m. So after our market get closed, then a US market opens and they operate for certain numbers of hours. And once next day before our market opens, you have Asian market which opened before us. And what happens that by the time our market opens, already certain hours of trading happened in Singapore market or South Korean market or Japanese market. So when our market get opens, so it get influenced very heavily from what is happening in the Asian market, what has happened in the US market and European market, because European market also they opened around 12 o'clock to 1 o'clock in our Indian Standard Time. So post lunch, our market get affected by European market till 20 to 30%. But by the time our market get closed, then the remaining 60 to 70% of the European market works. So next day when our market opens, it get influenced 100% from US market, 10 to 15% of the initial trade of Asian market, and last 50% of the trade of the European market. So just to make sure that our market does not get too much influenced by these impact, that's why we have something called pre-market hours, so that initial orders what is being placed by different participants in the market can be carefully observed by all the participants, and based on that only the people, new people can place their order in the market. So that is why we have this concept of pre-market hour. So I hope you have understood this concept of pre-market hour. Okay, so whenever any company is in need of the fund, they can raise the fund by equity or by debt. Debt instruments are also traded in the market in wholesale debt market segment of NSE and retail debt segment of NSE. But we'll not focus more on debt market, because debt market as such is not that liquid, and not much participants you'll find in debt market. We'll focus more on equity market only. And once the market get opens, then we can primarily select stocks for intraday purpose or for delivery purpose for trading in the market. Already in the previous session I have discussed difference between intraday trading and the delivery trading. So when we talk about intraday trading, in intraday trading we don't have to pay 100% of the money. We'll get 5x leverage when we do intraday trading. It doesn't mean that this works every time. Certain scenarios, maybe on certain days like budget day or election days, or you might find this leverage get changed. So here, in the case of intraday trading, we just need to make 20% of the payment. We don't have to make 100% of the payment. whenever we want to do intraday trade, we just need to make 20% of the payment. Okay, and by making 20% of the payment, we can take position on any stocks which we believe that they are giving good movement today. So stocks can be either bullish or the stocks can be either bearish. Okay, so whichever the stocks you feel that they are bearish, what you can do short selling on them. Okay, you can sell them first and you can buy back them before 3:15 p.m. Or whichever stock you feel that they are bullish, you can buy them now by paying 20%, and then before 3:15 p.m. you have to sell them. Okay, or exit from the position. So when we do intraday trading, we can buy now or we can sell later before 3:15 p.m. Okay, so that we can do. Or those stocks which we feel that they're negative, we can sell them now. We can sell them now, buy back before 3:15 p.m. Buy back before 3:15 p.m. So all that is possible. Okay, either we do intraday trade or we do uh, when we work on intraday day segment. So where we are getting in leverage of 25x, means we just need to pay 20% of the payment. So to figure out the stocks for intraday trading and all, what you can do, you can go to this website called portal.tradebrains.in. You can go to this website called portal.tradebrains.in. If I go to this website portal.tradebrains.in, okay, and here, what I can do, I can search those stocks which are giving good movement. Go to the heat map, okay. And when we go to the heat map here, we can see these stocks. Like today, you can see here I selected Nifty 50. Nifty 50 means the best 50 companies of our market. So here I selected Nifty 50. Here you can see in Nifty 50, Power Grid has given around 3.7%. Then you can see Hindustan Unilever, Adani Port, JSW Steel, Bajaj Finserv, Bajaj Finance, Supply is there, Bharti Airtel, Britannia, Adani Enterprises, Tata Steel. Tata Steel from last 1 week has given very good movement. Okay, Nestle is there, Hindalco is there, Infi is there, Coal India. Okay, you can see all the stocks which are giving good movement. Then if you want to see the stock which has given negative movement, you can see Trent is there, Indus India Bank is there. Below 5%, there's no stock. 0 to 2% negative. TCS is negative. Today I expected TCS to be positive, but it is negative. Bajaj Auto, Wipro, Kotak Bank. You can see these stocks are negative. So these are the, you can see in Nifty 50. You can see Nifty Next 50. Nifty Next 50 means from 51 to 100 companies which are positive, which are negative. You can see them. Okay, so positive or negative, you can see the stocks. Okay, so like this. Okay, then you can go and search in Nifty 500. IT, I think, is a negative today. So IT index is negative. In IT, you can see Infosys is HCL and Tech Mahindra are positive, while Mindtree or Coforge, Wipro, TCS, Mphasis are negative. So like this, you can select a different index and you can see which index is positive, which companies are positive, which companies are negative. You can observe them here. Okay, and based on this, you can decide your trading decision that should you buy or should you sell these stocks, whichever stocks. Okay, primarily you can select these stocks based on these scenarios. I hope so far this is clear. So one website is portal.tradebrain.in. From this website, you can search the stocks for the intraday trade, or you can go to this website called Intraday Screener. Okay, you can go to this stock called website called Intraday Screener. If you go to this website called Intraday Screener, here you can see the top news like JSW Steel has touched 4-month high after their production jumped 12% year on year basis in February. So imagine if you had bought this stock, JSW Steel, in delivery. So definitely you would have got very good return. Okay, so like if you want to see the movement of the stock, you can go to this website called you can 1 minute. You can go to this website called TradingView. Okay, you can go to the website called TradingView. And TradingView, first, if you're logging for first time, you have to integrate TradingView with your email ID. And then here I can search this stock called GSW Steel. Okay, I can search for this stock called GSW Steel, and this should be traded on NSE and BSE. And if I click here, I can see the chart of this stock. You can see that I'm seeing in 15-minute chart. Okay, I'm seeing that in 15-minute chart. So you can see it has given very good movement. If I see in daily chart, if I see in daily chart, okay, see the movement of the GSW steel. Okay, so see the movement of the GSW steel. Okay, so it has given very good movement. So it has given very good movement. You can see, for like January, it was somewhere around 890. Now, January, it was somewhere around 890. Today, it is around 1000. So you can see the movement here. Okay, January end, 1 month before, it was around 925. Now it is around 1000 rupees. So you can easily understand it has given more than 11% return within a month. So like this, for the swing trading, we can figure out a stock. And swing trading is all about when we buy the stock and hold the stock for 1 week to 1 month, and those stocks which we figure out, if it has given good movement, then it is considered very good swing trading. Okay, so for swing trading purpose, you can figure out the stock like this way. Okay, for either you follow news, or what you can do, either you can follow news, or we can go to this website called charting. And here, when you go to this website charting, go to the screener, and here just search for swing trading. Okay, just search for swing trading. I have created a screener for the swing trading. Okay, I'll, if you want, I'll give you the link for that stock. Okay, swing trading by Amit Kumar Singh. 1 minute. So if you just follow the screener what I have created, that will help you to get the stocks, and then you don't have to put lot of effort to get into that. So this is the screener what I have created. So if you want, I'll give you the link also, or you just, otherwise you just see the link of the website. Just copy this and you can paste, or you just type this link in your browser. You will get this. Okay, you will get the considered trade link what I have created. So once you come to this here, okay, then just run this scan. And when you run this scan, you'll get the all the stocks. So like Adani Energy, G Entertainment, JSW Energy, Jindal Steel, Torrent Power, Imami, okay, Linda India, Adani Power, Bandhan Bank, Adani Enterprises, Thermex, National India, Data Patents. This all are the good company which you can consider for the swing trade. Okay, so here Nifty 50, 500 is there. If you want only best 50 or 100 company like this, you can select. It's up to you. And if I say no, I want only good 100 companies only. I don't go below 100 companies. So I selected Nifty 100 and I run the scan. Out of 100 companies, like around 23 companies are there, which you can consider for swing trade. So very easily you can find these stocks and then hold this stock for 1 week to 1 month. So like this, you can use this link for finding the stock for swing trading. Similarly, guys, if for intraday, you can use this intraday screener, or sorry, for you can use portal.tradebrains.in, or for finding the stock for intraday, you can use this screener. Under intraday screener, you can run this screener. Okay, you can run this screener. So it will give you the stock like you found here Grindwell. So Grindwell is doing very well. So you can think about buying Grindwell for intraday purpose. So whenever you are looking for intraday and all, you just see in 15-minute chart. Okay, just see in 15-minute chart and 15-minute chart. Suppose I got the stock called Grindwell. Yeah, I got this stock called Grindwell. Okay, so if I got this stock called Grindwell, so how will you buy this stock? When to buy and all? So for this, go to indicator, okay, and search for pivot point standard. Search for pivot point standard, and here it will come like pivot traditional auto like this. Go to this next part called setting and change the type from traditional to Fibonacci and number of pivot back, make it one. Okay, and then if you want to make the entry now, you can see what you can do once you get this. Then what you can do, go to this called screener called Super Trend. Okay, okay, you can go to this called Super Trend. Okay, and here what you can do, ATR. Okay, here hmm, uptrend, downtrend, and I can remove this background thing. Okay, super trend. It is telling that you can buy from 1633. So there's a resistance around 1633. You can buy from that. Okay, or you can use VWAP. If you use VWAP, okay, okay, you cannot use more than two indicator. So what I can do, I can use here. If I use VWAP, volume weightage average price. Okay, we'll talk about them in when we discuss uh, technical. Here for the time being, just see VWAP. It is above VWAP, that is fine. So now what you can do, you can see from where it has opened today, or like if it right now 1625, you can make buying from 1626, and the target what you can select is 1650. So you can consider 1650 as your target, and you can put stop loss around 1611. Okay, you can see these are called resistance and support level. So resistance is the maximum what the stock can go, and support is the minimum what the stock can go. So so every time whenever you are trying to get into the trade, every time whenever you are every time whenever you are trying to get into the trade. Okay, so so there is a resistance, okay, and there is a support level. There is a resistance and there is a support level. So right now, what we are seeing about the grind well. So what we are seeing about the grind well, that it is around, it is between these two level. 1650 is the resistance. 1650 is the resistance, while the support of this stock is 1611. 1611 is the support. So if it go below 1611, the stock will become negative. And if it go above 1650, it become very positive. But for the time being, it is somewhere around 1624. So if it around 1624, what you can do, you can select 1627, or you can select today high. What was the high for the today? You can select what is the high for today, and one grind well. If I select here grind well, okay, so what is high? If I select the grind well, so you can, okay, 1633 or 1644, you can buy the stock. Okay, or you can buy at the current level. Better, I never prefer to buy at the current level, because sometime we can be wrong also. So because it is trading around 1623 or 624 or 25. Okay, so what you can do, you can select 1627 or 1630. Better entry if you can do after 1634. Okay, and the target for you would be around 1650. Okay, target for you would be 1650. So because if you noticed, when got this stock, it was around 1625. Now it has become 1621. So what I will do, the best entry would be after 1635. Okay, and the target would be 1650, or you can just choose 1627 or 1630. 1628 or 1630, depend on how much risk you can take, and you can make entry with the target of 1650 with the support of 1611. Clear, everyone? I hope that part is clear with everyone. Now imagine if you're entering at 1634 and you're targeting 16 rupees profit. So what you can do, put your stop loss at 16, below 16. So 1634 minus 16, if I do, so I will get is 1618. So better put stop loss entry at 1634. And if your target is 1650, then you can put stop loss at either 1618 to 1620, like that. So that if in case if whatever you're thinking is not correct, if it does not give good movement, instead of that, if it fall down, it should not fall down very low. So before at level, you can exit from the trade. So for intraday purpose and all, guys, you can go to this website here called portal.tradebrain.in. Here you can see which stock is giving good movement, and then you can consider them buying, or you can go to this website called intraday screener, and from this screener you can go and run. The lot of screeners are there, intraday screeners, stock turning bullish from bearish. Okay, the lot of screeners are there. You can run this screener. Okay, you got lot of stocks like Adani Port, Adani Power, Bandhan Bank, BASF, Coal India, GMR Airport. Okay, you will get these stocks. You can consider them for buying. Okay, I hope you are getting this. So the intraday screener is there, portal.tradebrains.in is there. Okay, these things will tell you the stock. Then Scanex is there. If you are having a Dhan Demat account, you can use Scanex. And in Scanex, if you're using Scanex, okay, here, if you get into the Scanex, here you go to live, and if you get into live, here you'll find a lot of stocks. Okay, here you'll find a lot of stocks which are giving very good movement. Hindustan Petroleum is giving negative movement. Torrent Pharma is giving very good movement, positive movement. Okay, you can see. Okay, so Axis Bank is giving very good movement. Sona BLW, okay, Jyoti CNC Automation, okay, see very good movement they are giving. Jyoti CNC Automation, okay, Adani Total Gas, okay, all Adani stocks are giving very good movement today. Okay, so you one by one, what you can do, you can search these stocks in Trading View. Hindustan Petroleum is giving negative movement. Okay, Adani Energy Solution is giving good movement. Okay, so you can see which stocks are giving good movement. Here in Scanex, you will find for intraday purpose, which all stocks are giving very good movement. Okay, you can consider them for buying purpose. Okay, Adani Energy Solution is giving very good movement. Okay, you can consider them for buying purpose. Okay, Adani Energy Solution is weekly high. Axis Bank is 2 week high, day high. Okay, see the movement of Axis Bank, Piramal Pharma, Axis Bank are giving very good movement. Okay, so you can consider them buying for intraday purpose. In intraday, you don't have to pay 100% of money. You just need to pay 20% of the money. As you can see, Axis Bank. Okay, so whichever stocks you feel that they look relevant for you, okay, you can see the market depth. Okay, you can see how many buyers, how many sellers are there. You can see this. Okay, so here green side, what you're seeing is the bid quotes. Bid quote is the quote of buyers. Okay, it's a auction market. When you're trading in the market, it's a auction market where people are buying and people are selling. And in red color, what you see is the ask quote, where you can see the demand and supply of the seller. Okay, so you can see bid quote, you can see ask quote, where uh, people are buying and selling the shares. Okay, so whenever you are placing your order in the market, whenever you place your order in the market, either either you place buy order or you place sell order. Your order can be market order or it can be a limit order. So market order is the simply the price at which the stock is trading. You simply press that price and the trade get executed, that is called market order. So like here, what if, imagine if I want to buy Grindwell stock. So here I have the option market order, or I can put limit order. In limit order, I'll say I'll not buy now. When I'll buy, when it will come 1632, then only I'll buy. Okay, so by that time, if I place the order, it would act like a passive order. And once it become 1632, then only my order will get executed. That is called limit order. Okay, and that limit order data summary of that limit order you can see here. You can see here limit order. Somebody has placed the order of 1623.5. Someone like this, you can see this order and all. And here this is called market order. Market order means doesn't matter what is the price right now, just buy that thing for me. If you buy intraday, you don't have to pay 100% of the money, you just need to pay 20% of the money. So you can see you can see here, uh, if you can see here that the price of the stock is 1623.5, but for intraday you just need to pay 326.89, and you are getting a leverage of 5x. 5x means you just need to pay 20% of the money. Okay, you don't have to pay 100% of the money, you just need to pay 20% of the money. What you are paying, so these are the charges for the trade. Okay, is the charges. And to get into this trade, how much extra you need to pay? You can see you have to pay a brokerage of 49 paisa to the fires. Okay, and then 5 paisa for the other thing. GST is 10 paisa, and stamp duty is 5 paisa. So total extra you just need to pay 68 paisa for getting into this trade. Clear everyone? Clear everyone? So you just need to pay 68 paisa. And if you want to get into delivery, if you overnight, if you have to get into delivery, means if you get into delivery, you have to pay 100% of the money. You will get the complete ownership of this share, and then you can hold this share when how long you want to hold. And for swing trading, you can hold this share for 1 week to 1 month. For positional trading, you can hold this share for 3 months, 6 months, like that. For investment purpose, you can hold this share for more than a year. So if you are doing delivery trade, then you have to pay 100% of the money. You don't get any leverage. But if you go for intraday trade, you just need to pay 20% of the money to get into the trade. Okay, and by just paying 20% of the money, you can get into this trade, but you have to exit from this trade before 3:15 p.m. If you do not exit, your broker will exit by that time. Okay, so better you only exit before 3:15 p.m. Okay, with how much profit or loss you are making. Okay, you cannot hold the trade beyond the day. Okay, but if you are doing delivery trade, you can hold the share how long you want to hold. For intraday purpose, you cannot hold the share beyond a day. So I hope you understood the term intraday trade. Okay, and whenever you're placing order, you can place market order or you can place limit order. If you're placing limit order, so you can see this is bid price, the price at which people are buying. You can see offer or ask price, the price at which the people are selling. Anytime you can see best bid, best five bid. You can see best five bids and ask. You can see best five bid. Anytime when you're placing order, you can see best five bid, and you can see best five bid. You can see best five bid and ask. You can see best five bid and offer or ask. You can see. Okay, so here out of all bids, whichever bid is the highest. Okay, whichever is the highest is the best bid. Okay, it's the highest of all is the best bid, highest of all, and out of all offer, whichever is the lowest, whichever is the lowest of all is the best ask. So highest of all is the best bid, and lowest of all is the best ask. Okay, so now whenever we perform the trade with the difference between a best bid and best ask is called bid ask spread. Okay, best bid minus best ask. Okay, the difference of this is called bid ask spread. The difference of this is called bid ask spread. Okay, so bid ask spread basically determines the liquidity of the trade. So, whenever we are trading in the market, liquidity is very important parameter. And now to measure the liquidity of the stock, we look into bid-ask spread, and we can look into impact cost. So basically, better version to measure liquidity would be to look into the impact cost of the stock. So if you want to see the impact cost of any stock, you can go to NSE website and you can search for the stock name. Okay, and there you can see the impact cost here. Here in the details, you can see the impact cost of the stock. Like for Infosys, the impact cost is 0.02%. So whatever is the impact cost basically tells you how much extra in percentage uh, you had to pay just to compensate the liquidity of the stock. Although Infosys is trading at 1713.75, but if you want to buy Infosys 1713.15, it is trading at this price. But if you want to buy this stock, you may not be able to buy this stock at this price. Above this, you have to pay 0.02%. Okay, why? Because to compensate the liquidity of the stock. Because when you're buying and selling, there should be enough number of buyers and sellers in the market, and because of which certain time you're not able to buy at the price at which the stock is trading. So the extra what you need to pay for buying uh, the extra for the liquidity is called impact cost. And similarly, when you are selling it, you may not be able to sell. Imagine that if I'm holding Infosys as I'm having the shares of Infosys and I want to sell it, I may not be able to sell at 1713.15. I end up in selling below this price. Okay, this why this is happening? Because of the problem of impact cost, because of the problem of liquidity. So this is measured by something called impact cost. So impact cost basically tells how much the stock is liquid. So generally, the impact cost of the stock should not be more than 0.05%. If the stock impact cost is more than 0.05%, then it is not considered very good stock. Like suppose if I want to see GTL Infratech or GTL infrastructure, I want to see the impact cost of this stock called GTL Infra. Imagine. Okay, so then this stock is trading at one rupee 58 paisa. You can see the impact cost of this stock is 58.58%. Okay, you can see the buyer and seller of this stock. Okay, so certain stock and all, when you see, they may not be very much liquidity. So if the stock is not having that much liquidity, then you might struggle for trading. Okay, so it's because of the liquidity problem. So that kind of stocks which can have liquidity problem, automatically they will have higher impact cost. Okay, so you can Google it to know more about impact cost and all. You can read it about yourself. But more or less, the impact cost basically gives you an idea about the extra cost what you are paying on any underlying asset whenever you are buying or selling them beyond the price at which they are trading. That is called as impact cost. So basically, the when you're seeing on your screen, you can see best five bid price and best five ask price. Whenever you're buying any stock, you always want to buy them at the lowest to lowest price. So highest of all, the lowest price is the best bid price, and the lowest of all ask price is the best ask price, and the difference between them is called bid ask spread. And the average of best bid price and best ask price is the ideal price. So you may not be able to trade at the ideal price. Okay, the you may end up in trading above or below the ideal price. Then that happens because of impact, or that happens because of liquidity issue. So ideal price is basically the average of best bid quote plus best ask quote. Okay. So the average of that is the ideal price. You may not be able to trade at the ideal price because of the liquidity issue. and that is measured mathematically with the term called impact cost. You can read here, liquidity in the context of stock market means a market where large order can be executed without incurring high transaction cost. Okay, that is called liquidity, that you can easily buy and sell the shares. The transaction cost refer here, not the fixed cost typically include like brokerage, transaction charges, depository charges. This is not what the transaction cost here, what we mean, but it is a cost attributable to the lack of market liquidity. Okay, so liquidity comes from buyer and seller in the market who are constantly to look out for buying and selling opportunity. So electronic limit order book. Okay, the electronic limit order book, which you see, this is the electronic limit order book. Okay, are available on NSE as an ideal provider of the market liquidity. Okay, this style of market dispenses with the market makers and allow anyone in the market to execute order against the best available counter trades. Okay, so the market may thus be thought as a possessing liquidity in terms of outstanding order lying on the buy and sell side of the order book. So whenever we are placing order, we are either buying or selling. So we can buy at the market order or at the limit order. Limit order is the order what we placed and that will hold as a passive order. Okay, so whenever we are placing a passive order, so it the trade will execute when that particular price will reach. Okay, so for that there should be enough liquidity in the market so that the price can reach to that level. There should be constant buyers and seller who are buying and selling, keep on buying and selling, keep on buying and selling. Then only that price can be reached. Okay, otherwise that price cannot be reached. Okay, so that happens because of liquidity. Okay, so here I have explained you what is bid ask spread. Okay, okay, and then when you're seeing in the market, you have the buying price, you have the selling price, and then to calculate the additional price what the buyer and seller has to pay whenever they're trading. Okay, that is measured with something called impact cost. Okay, so ideal price already I've defined as the average of bid and ask. Okay, so you may not be able to trade at the ideal price. So above it, what you're paying is the impact cost. Here you can read about this. So ideal price, suppose best bid and best price, you got this as ideal price. But instead of buying at this price, your trade may happen something beyond it, above it or below it. So the extra what you paid is the impact cost. So impact cost is the measurement of the liquidity of the stock in the market. Okay, by knowing the impact cost, you have an idea about how much extra you are paying for the trade because of the liquidity issue. So this much, I think everyone is clear with this much part. Okay, so when you are trading in the market, you should have an idea about impact cost, what impact cost is all about. Okay, tick size already I have explained you. What is tick size? Tick size is the difference in the price whenever you're placing your order. The tick size is like when you're placing your limit order. Okay, the difference should be 5 paisa. है ना? You cannot put 1.586. That should be 5 paisa difference. And for this GTL infra, it is 1 paisa because this is very small. uh, Clear everyone? So when you're trading, you know what is intraday order, what is limit and all. Okay, here for GTL infra, intraday is also 1x, and you will not get the share for 5x leverage. And for this GTL infra, either you do intraday or you do delivery, you have to pay 1x. 1x means 100% of the money. So it all this depends on the broker, it depends on the market participants, depending upon the risk management, they decide ultimately either you are doing delivery or you are doing intraday trade, what is the amount you have to pay to get into that kind of transaction. And whenever you're getting into the transaction, the extra what is being paid to you, that you can see the price breakup, regulatory and the brokerage charges you can see for intraday trade and delivery trade that might be differ from each other. So guys, basically, whenever we perform intraday trade or we perform delivery trade, the idea about electronic limit order book or the idea about impact cost is very important. So that whenever we are trading, we should have an idea about how much people are buying and selling that underlying asset. So if we get an idea about that part, that looks very good. Okay, that is very important to have an idea to know basically the market behavior or what the market is thinking about that particular stock. Okay, imagine you want to buy or sell any stock, like maybe I want to buy or sell Axis Bank and all. So if you are in trading view, you can go to this indicator here and to know that is the stock is positive or negative, or like how much you can be sure about that. Here in indicator you can go and search for this indicator called market sentiment technicals, okay, by Lux Algo. If you go there, okay, here you can see that yeah, this stock is near, this is bullish to strong bullish. Okay, you can see that and just Axis Bank is bullish to strong bullish. Okay, and the stock looks good for the buying purpose. Maybe if you want to buy GTL Infra, just for example. Okay, so here I can go and see for GTL Infra, this is a bearish, means you should not buy this stock right now. Here you can see also this is under red cloud. Blue cloud means that is positive. So if you use this indicator called market sentiment technicals, you whatever the stocks you are searching for intraday for delivery purpose, you can search them under this indicator called market sentiment technicals. For intraday purpose, use the time frame as 15 minute. For swing trading and all, you can use 30 minute, 45 minute to 1 hour time frame. Okay, so you can search for 1 hour time frame, 1 hour, 2 hour, or 30 minute time frame. Okay, so maybe I want to buy JSW Steel for intraday for what you say swing trading purpose. So I can see in 1 hour time frame that looks very strong bullish. Okay, JSW Steel. Maybe for intraday purpose it look different. Swing trading for depend on how long you want to hold. Okay, so that way you increase your time frame. Okay, that way what you can do, you can increase your time frame. Normally for intraday trade, normally for intraday trade, we see the time frame as 15 minute. For intraday trade, we'll consider the time frame as 15 minute. For swing trading, we consider the time frame as 30 minute to 45 minute to 1 hour. Okay. For positional trade, okay, maybe beyond 1 month to 3 month, if you're considering, you can see 1 hour to 2 hour to 4 hour. Okay, you can see the stock in this given time frame. While for investment purpose, if you can consider the time frame from daily to weekly. Okay, so like this, you can consider different time frame, and under these different time frame, you can observe any underlying asset. Like here for swing trading, I got some stock, maybe Adani to Energy Solution. So imagine if I get Adani Energy Solution, so I can search here Adani Energy Solution, Adani Energy Solution. If I get, so I can see, yeah, this stocks look strong bullish. And what I can do, I can make entry above this level, R2 level. Okay, so R2 is somewhere around this 784, 784. So if I get this breakout of 784, I can make entry and my target would be around 828. Okay, that would be my target, and I can put a stop loss of around 760 for this stock called Adani Energy Solution. Okay, so if it break out this 784, I can make entry here. Similarly, the other stock I can consider. Uh, Similarly, the other stock, JSW Energy. Okay, JSW Energy. So for GSW Energy, GSW Energy, if I see GSW Energy, so what I can do for making entry, I can make entry after 512. 511.85 is a resistance level. Okay, after that I can make entry with the target of 527, and my stop loss would be 486. You're getting it right. So we can change the time frame to get into the trade. Okay, so resistance is the level, like like why I'm saying above 512, because you can see there's a resistance at 511.85. So if it give a breakout above that level, then only I'll make entry. You're getting it right. So if we give a breakout above that level, I'll make entry, and my target would be the next resistance 527. If we give a breakout above that level, imagine it's giving good value. So then my next target would be 553. You're getting it right. So this way, what you can do, you can select the stock and you can proceed with your trade purpose. Clear everyone. So for swing trading, we'll look for the time period as 30 minute to 1 hour to 2 hour. For intraday trade purpose, we'll consider 15 minute to 30 minute to 5 minute time frame. I hope this all is clear with everyone. Anyone is having any doubt, you can use the comment option, or you can message me if you have any doubt in understanding this. So basically, whenever we are trading, we can trade for intraday purpose. We can trade for delivery purpose. Delivery means where you pay 100% of the money and you are buying the stock. So whenever you buy the stock, you'll get the confirmation for the trade in the form of a PDF document called contract note. Contract note gives the proof that yeah, you have traded on this instrument, and by the end of the day, you'll get a mail from your depository, either NSDL or CDSL. You'll get a mail from them where the details about the trade, what you have done is mentioned, and that PDF document is the proof of the trade, which we called as a contract note. Okay, and once you have the share, okay, it means you are the owner of the share, so you get the voting right. Okay, tomorrow if the company will conduct any kind of voting, they will call you for the e-voting. They will get a mail for the e-voting. Okay, so at the same time, if the company declare dividend or bonus, you will get those values. So basically, the net profit, what the company is making at the end of the day, some part of that net profit company gives to the shareholder as a dividend, and the remaining part, what they retained with themselves, is called retained earning. Okay, so dividend is basically the part of the earning, means earning what the company made. Okay, if they want, they can give to the shareholder, and that part of the earning what they give to the shareholder is called dividend. Okay, so there are many companies are there which are known for giving dividends. Okay, so you can Google it about those stocks, so which gives lot of dividend, and those companies which you want to see them, you can search for the stocks which are giving dividend yield. Okay, means which are good, means 5 to 6%, like Coal India or Vedanta. They're known for giving dividend. So you can see, search for the stocks which are known for very good dividend yield of more than 6%. So dividend yield is basically total dividend paid in last 1 year, total dividend paid in last 1 year, total dividend paid in last 1 year, divided by the average price of the stock. Okay, that is your dividend yield. That is your dividend yield. So dividend yield, you can search for the stock which are known for giving dividend. You can Google it to get the stock. Okay. So stocks with high dividend yield, high dividend yield. Okay, and here you'll find all the stocks, okay, which are known for giving dividends. Taparia tool. A dividend yield is 243%. Multi-base India, MSTC, Jagran, 7% they are giving dividend. Coal India 6.69%. And DB Corp, Gujarat People Live Port, VST Industries, and they are known for giving the dividend. So if any company like Coal India and all, if they are giving dividend yield of around 6 to 7% per annum, means the return what you get from FDs and all more than that the Coal India will give you in the form of dividend only. So dividend is the excess extra income for you and apart from capital appreciation. Okay, so dividend is the part of the profit what the company gives to the shareholder and as a kind of benefit as a compensation. Okay, that we call as dividend. And apart from dividend, company gives bonus. Bonus means extra share they give to the shareholder. Okay, there are a lot of corporate announcements the company do. You can once you get into the market and start observing them, you will get to know a lot of things. Okay, so payment of dividend and all is not a compulsion for the company to do. If the company want, they will pay dividend. Otherwise, not a compulsion that they have to give dividend to the shareholder. Okay, whenever they pay dividend to the shareholder, so it's up to them to pay dividend. Okay, so dividend is the part of the profit what they give to the shareholder, and whatever the part they retain with themselves is called as retained earning. Okay, so I hope this much is clear with all of you. Fine. So we'll do this much in the present class. I hope you have understood what all we have done in this class. I'll not uh, elongate the concept or I'll not increase the length of the class video beyond a certain moment. So I feel it's time to wind up this session. Thank you, everyone. Please go through these videos and let me know if you have any doubt.